Hi, good afternoon. This is Mayor Valensky with Driving Markets. Hope you're well. Okay, so anything said in this piece is an opinion only. As one of my most favourite fans, Ronnie, keeps mentioning, it's only an opinion. Anyhow, let's kick off. So the markets have gone up for the last couple of days. Today you've got the PCE. Now the PCE is the personal consumption expenditure, which is the most favoured measure of inflation in the US. Now, if that obviously comes in higher than expected, then there's going to be more pressure on the Fed to raise rates even more. Okay? If it comes in lower than expected, then obviously there'll be less pressure on the Fed to raise rates. So all the other measures, which are CPI, Consumer Price Index, PPI, Purchase Price Index, all of the wholesale and retail inflation figures, they are lagging indicators. Okay, everything to do with inflation is a lagging indicator. It gives you a picture of what happened in the last 30 days or the last month. They're not leading indicators. So the PCE, which comes out today on Friday, is a lagging indicator. All right, and it is as I mentioned earlier, the most favoured inflation measure as far as inflation is concerned. So where does that leave us in relation to the banking crisis, inflation, economic numbers, sales growth, etc.? So some of the viewers are saying that all this channel is doom and gloom. Well, actually, it's not only doom and gloom, it's just giving you a perspective, a broad run through of what's happening globally across all sectors of the market. So we're going to have a quick run and see where we're at regarding individual sectors. Let's start off with equities. So equities in the US, Europe and in the UK finished higher yesterday and are continuing overnight. The futures are moving higher as we talk. In other words, what they're looking for is they're getting good solid support from the belief that the banking crisis or the banking blip was only a blip and nothing's going to happen as regards any other further banks within the banking sector. Probably untrue. There probably is going to be other banks that are going to effectively fail, and what will happen is that the tier 1 banks, which is the top level banks, will come and either support them or buy them out, or the Fed will come through the regulator and buy them out or give them some sort of financial support as far as the US is concerned. Moving on to Europe, as far as that banking sector is concerned, then obviously I mentioned earlier, you got Credit Suisse that failed, and Deutsche Bank and BNP Paribas are the next banks in the firing line. So a lot of attention is being paid to those two particular banks. Okay, now when interest rates go down, going back to inflation, where we're at with the PCE and the CPIs and PPIs, when inflation it will go down. Inflation's in the spotlight. Let's be more specific. The Fed is looking really to stop interest rate rises. Those interest rate rises are impacting significantly on the economy, on spending, and also on companies and corporate earnings. Now, the Fed itself has indicated in February that they're going to be aggressive towards interest rates, but that was before aggressive towards inflation and rising interest rates. That was before the banking crisis came out. So take that into consideration. The markets are hopeful that there'll be no interest rate rises and the banking crisis is over, and that's really what's led to the rise in equities. Bond yields have dropped significantly, and they went up slightly in the last few days, but they've fallen off significantly to where they were. That's also given a boost to the high-tech sector, NASDAQ, and any of the big techs like the Apples, the Amazons, the Metas, etc., Google, Facebook, Microsoft, because lower interest rates is always favorable as far as the high tech's concerned, because they are big borrowers of cash. Okay, now what's likely to happen in regarding going forward is that there may be another 1 or 2 interest rate rises as far as the Fed's concerned, and the market's reading into that interest rates are now not going to go any further, and as I said earlier on, the banking crisis is over. If any one of those two doesn't happen, in other words, there is another further banking crisis, or inflation moves up higher than expected, or interest rates move up higher than expected, obviously that's going to be a big dampener to equity markets. I've called equity markets down throughout 2022 and into 2023, and I'm going to continue calling them down in 2023 because there is a liquidity issue. There's a liquidity crisis, and that's going to push markets down. The dollar, unless interest rates move up, the dollar is going to be under pressure. In other words, it's going to continue falling against the majors, okay, especially the euro and especially the pound, okay. So you're going to have a weaker dollar throughout 2023 unless there is a change in the interest rate environment. I personally believe that the Fed needs to raise interest rates a lot more, but it could be that they just stop raising interest rates and therefore they're hoping that inflation is under control. Personally, I don't think that's the case. Gold's an interesting one. Those who are precious metal traders, gold's up to about 1987, 1980, something like that, approaching the $2,000 level. If it breaks through that, it's going all the way through to 2100. Remember, gold is a safe haven sought after in times of economic issues or economic crisis. And with the banking crisis whereby it makes the dollar look weak, gold will be strong, and other precious metals like silver also will move up in line with that. Oil has moved up this week, interestingly enough, and oil is at $73 a barrel. It looks like Kazakhstan and the Russians and other countries will keep on cutting production in order to get the oil back up there to $85 a barrel. Inflation came out in the Eurozone lower than expected, mainly due to energy prices fall, and therefore as a result of energy prices fall, the Eurozone benefited from a lower inflation. However, the other factors like food price is very, very high, stubborn, not moving down, only moving up, and that is a big concern as far as the Europeans and the ECB and Christine Lagarde is concerned, because it's stubborn, it's not moving, and that seems to be consistent with the UK, with Europe, and obviously with the US. Cryptos, interestingly enough, Bitcoin did get up to 28.5, it's now 27.5. 30,000 is the next level to go through. If it breaks through that, then it's going to go to 35. Not too sure if it's going to happen. This is Mayor Valensky with Driving Markets. Have a good day.